Hello everyone. So today I decided to make a video on how to read the market structure, a concept that is very essential if you are a trader. So, by the way, this is TradingView, a powerful tool that many traders use. So, if you don't have it, I'll leave the link in the description. All right, so let's start. So basically, every time you look at a chart, what do? You always have to zoom out. Okay, always, and go on the daily. That gives you a clear picture of what is going on, because see here is an uptrend. If I zoom out on a 15 or 1 hour time frame, believe me, you won't understand that much. You see what I mean? So always zoom out daily. At least you have the bias, you know where the price is going. Okay, so let's just assume we are going to trade from the bottom. You might think here it's still going down, okay? But okay, now you're probably gonna say, yeah, but the price is right there. You can see what is happening, right? But this is just for the sake of the video for you to make you understand. Okay, I mainly trade on a 4 hours time frame. Remember, the higher the time frame, the the better. The levels are more valid. Okay, so what do we do? How to read the market structure? So you don't need to do this. Higher high, lower high, lower high, lower low, lower high, lower no. Those are little pullbacks. So you have to get always the most external swings, and those are the major levels. Which ones? Okay, this is one, and this is another one. This is another one. So what I usually do, I get the most external swing, which is this one. See here, guys? So what happens? Let me mark it and then I'll explain. Okay, now we have these two levels, see? So whatever happens within here, we really don't care. You know why? Because the price can go down, can even actually go down here, but as long as it doesn't close the candle below this low, we are still in here. Okay, it always depends where the price is coming from. That dictates if it's uptrend or downtrend. Okay, see, the price is coming from above, means we are still in a clear downtrend. But look here what happens. Still the price does whatever it wants. Here, by the way, would be the best. No, actually, no, don't worry. So okay, what happens here? Price just skyrockets. So what happens until the structure is not broken, which is this one? The price punches through here and breaks the structure. Means it broke the structure. It keeps on going up. Now what do we do? Once the price breaks the structure, this one, it will be the new high. So it is not anymore. Actually, let me leave it here just for you to understand. Because the price is coming from above, and now it changed the character. So I use this term, or in smart money concept, that's what we use. Yeah, and now the price from being bearish is going bullish, means from downtrend it's going uptrend. Okay, so what happens once the block change the character? So this is the new high now, and where is the low? This is not anymore this one. It's not this one. It's not this one. It's actually this one. You might be wondering why. Because again, you have to get the most external swing, which is this one. It's not this one anymore. You might think, but why is not this one? Nope, it's this one. There is a rule I'm gonna show you now. It's a little bit simple for you to understand. Okay, so this is one, the lowest low, and this is the highest high. That's how you read the structure. Let's just assume we don't know what's happening. Let's just assume, so this is the low, this is the high. The price can go anywhere, actually, because it actually turned into bullish. What would you do in this moment? Just remember these words. You take the last candle that created the sell to buy. When you see an imbalance like this, do you see all these little candles? They're not very big, right? Same, yeah, not big. But look at this one. This is called a bullish engulfing candle. Um, that means there's a lot of buying pressure. So much that even broke this level here. So I'm just giving you a few tips. This would be a zone. So by the way, guys, when you mark the levels, don't don't use lines, okay? Because look, lines are never precise. This is mostly for when I use these kind of lines. I use for the smart money concept again, which you don't really need to use this now, but use as use with the areas. Anyway, so what I was saying before. So once the price pumps like this, means here there is another block. There's if the price ever retraces to this point, it's most likely that the price will shoot up again. So also here, because see this candle here, give me a second. See this candle again, it pushed up. There is an imbalance in the market. That means because the price went so fast and the next one again went up, it didn't go down like what you're seeing here. Here create an imbalance, and look what happens. You so to find this is called fair value gap. To find the fair value gap, you take the highest of the previous candle and then go to the not the middle of this one, the third candle, which is this one. You mark the low of the third candle. This one here, this area, is where the imbalance adjustment. And look what happens. Here, definitely there were buying orders. In fact, look what happened with the price when they shoot up again. Even better if the price keeps on going, it hits this area. Yeah, it's even better because here where the move started. Okay, so whenever you find these big moves, always mark the area. Again, here's another one. Look what happened here. See, when the price goes to find the area again, it goes up again. But always depends, if there are orders or no. Okay, now let's go back to what we were saying before. So here is the new market structure. Okay, what happens? This I wouldn't call consolidation. I will actually call again a breaker structure, the upside. Now I would say this one is the new low, and this is the new high. One second. Okay, you guys see here? One second. Let me zoom a little bit so you understand. See, it went up there, but it didn't close above until the price closes above the previous high. There's no continuation. And again, the price within here, this range, can do whatever it wants. But look what happens now. The price breaks this structure again. And now, tell me, where do we find the lowest, sorry, of the structure? So this is the top, because that's where the price went, and this is the new low. Okay. Okay, I hope you guys understood the concept of the market structure. Now let's move on to support and resistance levels. How do we find them? Okay, let me find a point here. Okay, so you see what happens here? Dogs. So the price goes up and then retraces and then goes up again, and then see how it's behaving here. So here, obviously, there is a level that buyers, they don't want the price to go any lower than that for whatever reason. In fact, what happens? Moves a little bit there and then goes up and then again retouch this point, and then look what happens. Buyers keep on buying, and then what happens? Price goes again there to the previous level, which is actually used to be previous resistance, as you can see. It tried the price to go up, but it didn't make it. But then, of course, buyers, they like to buy this tone and pushes through. And this is what happens. So the more touching points, the more valid is this area. Remember, always area. Don't try to be to do with the lines like this. It's not really you can't find exactly, because it's always about area, roughly, or yes, no, like, you know what I mean? Okay. So now, if the price, in fact, you can do already. If the price refines again the area, it's most likely it can go up again. But of course, they never guarantee. But that's how you find the area. I see. Look, the price keeps on going up. It touches in and go up. I want to point out, by the way, this is a beautiful triangle. This is a pattern that whenever you see this kind of moves, are usually bullish. If the price is coming from below, what happens? To understand the psychology behind it, now I'm gonna go a little bit beyond the market structure. So this is a pattern that sellers are selling whenever the price goes very up high. They're selling, but buyers, they're buying. Then again, sellers are selling. So it's like a price compression. Price compression. There are many sellers that are selling, but also the many buyers that are buying. Eventually, what happens? The sellers will be exhausted because there are no more sellers anymore, and then price will start shooting because of the buyers, the buying pressure. That's what happens. Let me zoom in. Let's try to look more patterns. Let's see if there is something here. Okay, yeah, again. So I'll just zoom in. What happened? You see, there's a bullish and sorry if I can speak. Bullish engulfing candle. So this again, another triangle. Look, usually again, those are continuation patterns. If the price is coming from above and then it makes a triangle, it's likely it's a continuation of a downtrend move. But here, price is coming from below. So of course, look what happens. Shoots up. These are patterns that you can actually trade. Yeah. So also, once the price shoots up here, you don't have to buy straight away from here. You can, but I wouldn't suggest. So what happens? Once the price goes up, it starts retracing. It usually happens. And then when the price it's somewhere here where the move started, you can actually buy. Always check for volume, which it's this one, the volume. You don't want a lot of red volume, that means sellers are still in control. But you want green candles like this, that means there's enough buying pressure, which, see, you can tell, yeah. I think I didn't cover everything. I just wanna cover a little bit more of on how to read the market structure. Let me see if I can find something. Okay, here. You see, yeah, this is a measure level. Okay, remember on a daily. Yeah, here by here. If I zoom in, especially on a measure level like that, when the price is going down low, look what happens. This is called a W bottom, a double bottom. Price goes down, but because it's a measure level here, sellers, the buyers don't really want this price to go that down. So what happens? It goes a little bit up, and then to confirm, the price goes again down. Once it goes up, especially on a major level like this, you can actually trade this pattern, which then the take profit would be, so once the price, so let's just say it's going down, up, down, and then you see that it's forming this again, this W. Look, once it goes to this neckline here, which is here, you can actually buy from here, and you can put your stop loss just below this low here, or this one, or this one, and take profit would be exactly for how big this V is, which would be here. Guys, look what I found here. I just want to show you something interesting that I found. Usually what I do when I trade, I don't clean my chart from the past. I just leave it. So in case I ever want to go and revise, I know what I did. So, okay. I want to talk about trend lines. Something, again, it's very important. Or how to take trades and so on. So basically, you can see here the price, it went up, okay? But it stopped here. The, the time I saw that the price stopped there, okay, so resistance. There's resistance there. Even though the price is going up like this, means there are enough sellers. Or for whatever reason in the market, the price doesn't want to go up there. So what do you do to mark the trend lines? You take, okay, you take each point of the candles, the touching points here again, and then you can draw a line. Those are dynamics points, because it actually doesn't exist, but it's, let's just say, you can see, right? So that's how it is. And then here again, 1 point, second point, third point, fourth point. So what happened here? As you can see, remember, as I was saying before, draw as a range, never straight line, a small line like this, because it's impossible. Okay, you can do trend lines only uptrend or downtrend. Okay, this is very important to understand. Um, anyway, so I was saying, the more touching points it's got a trend line, the more valid it is. But also, I would say up to 3 points is perfect, it's okay. But if it's gonna have 5 points, 6 points, 7, it's eventually, this is what's gonna happen. The price is just not gonna make anymore, and then drops down. Let me find more. I have one more. Look, one here, one touch here, one again, one here. Price is just moving like that, and then touch again here. Of course, now you can tell it's a clear uptrend because it's slowly, the price is slowly increasing. Unless the price goes down, then it retraces, and then it just keeps on going down. That's an uptrend. It will be a downtrend. Okay, I'll look at this as well. Oh, see, you can do even do like this. Depends, guys. Whatever you think, it's okay um, to do it, as long as you don't do this like something really random in the middle. No, you need to connect as many as points as you can. As I was saying before, dynamic doesn't mean exactly there. Sometimes can even do this. Like what I mean, the price can even go below that. I personally wouldn't like that, but it still can be correct. And let me find something. One second, yeah, because I want you to understand. Breakout. Mm, yeah. Okay. Let's just say you want to trade this pattern. Okay. I personally wouldn't suggest, because what I would trade this pattern. Remember, when you are in the middle of a move like this, you know what's best? This is best. Look, it's always best to trade the most external swings, not the internal ones. You might be wondering why. Because these points are the most valid points. These ones, it's like, who cares what is happening there? I'm just, because if you try to trade every single move, you're not gonna be successful. I have a friend, he does that. I still don't know how he does, but he's very good at it. But for me, I know that what works for me, and this is how I would trade this. So after a move like that, and then it goes up again, here, if I really had to, I would trade a short here. I would put a short here. Because what happens? Is coming from up, going down. What happens? Goes there. As soon as I will see a little bit of reaction here, goes down, and then again at the wick like this, then here I would just sell. I would short it. But because it's internal again, you have to be always careful, because again, the price, look at the price, can do anything. You know what I mean? Again, the most important points would be these ones. Look, here is one. This support here. Price went down. It's going down again. Here. Once you see that there's a little reaction, see the wick? This is the wick. Um, and then you see the reaction. Look again, a very nice bullish engulfing candle. Okay, that's a good confirmation that, or a good hint, the price is going to reverse going up. You can also use indicators, like I use mostly RSI, which is this one. It's called RSI, and then this one is stochastic RSI as well. I'll take more videos on how you can implement these indicators, but if you want to use this one, stochastic RSI, if I can speak today, RSI. So when, one second, look what happens. See, is at the very bottom, yeah. These two lines. When the blue line crosses the orange line, that's a good indicator. The price is going to reverse. In fact, look what happens, shoots up. This indicator is really good again when here, where there is the most external points, which is here. I mean, look here in the middle. Look what happens. Here is saying buying. See, it's reversing. But what's happening? Not really much, is it? And then look here again. It's saying sell, sell, sell. So whenever you see this line here, it's a buy. Whenever you see the line here, it's a sell. And look what happens. Stay a little bit and then start selling. And then see. But look what happened when it's here. It shows us, okay, it's a good time to buy. You can't rely exactly on this one. Uh, Mostly, that's why it's very important to understand price action. And remember, the external swings are the most important. Let me show you one more extra example. So here, price bullish, then turns to bearish, then bullish again, it keeps on going, then bearish again. How do we understand this? So let's start from here. See, this is the lowest low. The price goes all the way up, and then what happens? Goes retraces a little bit, and then breaks the structure. So what happens? So you can actually understand even better. You can do this. You can draw a box from the lowest to the highest, and then what happens? So the pricing here can do literally anything it wants. You can even go as low as here, but as long as it stays within this range, that's fine. The price still is in a bullish momentum, and yeah. So as long as it doesn't closes below the change of character, that's fine, guys. And then what happens? The price breaks through here, and then what happens again? Breaks the structure. So from this point to this point, we have to move. It's like we have to move everything like this. Look, from being like this to like this. Now, this was the lowest low, and this. Oh, sorry, this is the high. Yeah. Again, break the structure, but it didn't do it. It failed and breaks through change of character from here. Now we have a new market structure. So since it changed the character, now again we turn from bullish to bearish. This is the new range. So what do you do again? This is our range. But here what happens? Because you have bearish, breaks the structure. Once you break the structure, you get always the closest low, which is this one here. Now we have another range from here to here. Again, what happens? Goes down here, all the way down there. Here, it changed the character. Now we turn into bullish. So what do you do? We do this. Break a structure because it's bullish now. Lowest low, it's here. And this would be the change of character because we are bullish. So now again, the price can do literally anything it wants. Okay, so now guys, I think I covered everything in what I wanted to cover in this video. So next time I'll make a video on how you think you can take trades or you can trade patterns and breakouts and so on. So you can actually trade in a safe way. And trust me, after these videos, you'll be successful because I'm sharing things that I wish when I started to trade. When I was watching videos on YouTube, I really wish people would would have shared more info about what I'm sharing. Anyway, so that's all for today. I don't want to add more information so I don't overwhelm you. And if you find this video helpful or you want more content like this, please comment and tell me what you would like me to what video to make, and I'll make for you. Anyway, um, if you like the video, by the way, just like the video, so it helps me as well. Anyway, thanks for watching, and see you next time, guys. Bye.